Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, December 24th, 2009. Well, folks, we have another little update on Wall Street, which is pretty much par for the course this whole week. The reason being, again, you have such light volume, just that kind of euphoric end of the year type market making, if you will, where they constantly just bid the market up slow but sure on extremely light volume. Today, we've only traded about 15 million on the SPY. The markets do close at 1 p.m. Eastern time today, so be aware of that. Right now, the Dow is up about 50 points, the Nasdaq up 12, and the S&P 500 up about 5. That's basically a 0.5%. So across the board, you're continuing to see the light volume impact of the market. This continues to be the way it should hold up into the end of the year. Now, in all fairness, I think we're due for a little bit of a small down day. I don't think we're due for a big down day, but going into next week, I wouldn't be shocked to see a one down day where we sell off just a tiny bit and close maybe down 25, 50 points on the Dow after this type of continued slow up momentum. And then I expect the rest of the week to kind of be the same thing. In general, for the whole 2-week period, up to Christmas, through Christmas, and then up to New Year's, you have to expect, and this is what we've been calling to our premium subscribers, that you have to be looking for that positive to neutral bias, which has been exactly what we've got. Every day's been up, 25, 50 points on the Dow, etc. Just a constant little inch up every single day. Now, a couple things to go over here. The spiders have made a new 52-week high today. We just hit a high of 112.60, 112.60. That's a key level. We're now in the midst of some very, very important levels, as the premium subscribers to the chat room and research center know. That's a very, very big level. The other thing I wanted to make an announcement, folks, to kind of say thank you to current subscribers and to draw anyone new out there that'd be interested. We will be putting out 2 hidden gems reports in January to get the 2010 year off right. So I encourage you to join up and get in on the research center, as the average hidden gem has returned basically 50% in a month's time, months to 6 weeks time over the past year, and we hope to continue that streak this year. We've had as big as 500% winners and so forth. So again, be in on that as January comes into play here. You want to be all about getting in on those hidden gems. Plus, you obviously get the whole rest of the research center with it. I mean, everything comes in the research center, the nightly 40-minute videos on technicals, you name it, it's all included there in the research center. So the hidden gems is just a bonus going into 2010 that we want to encourage those of you that are new, want to try it out, and also obviously to say thank you to our current subscriber base that has continued to grow all of 2009 and prosper. All right, now going into the market here, folks, a couple things you want to discuss. Number one, you're through this 112.30 to 112.50 level, just above it. In fact, you've just come back underneath 112.50. And what I'm going to do there is that's what we call the Iron Curtain. The Iron Curtain is a very, very important level, and I'm going to put that line back here. And I just want to draw your attention to the fact that you technically do not have confirmation above 112.50 yet. So that level has been tagged and must be recognized, okay? So be aware of that there's no technical confirmation of a break above that at this point in the day, and you have a nice move up. Now, today we had some news out. What was the news? Well, the news was that the Senate approved the health care bill, so that's one more thing towards having health care reform. Now, the negative for that is that generally that's going to cause a much, much bigger debt load on the U.S. And what do we know about debt? The more money is printed, the less each of our individual dollars are worth, so therefore the dollar would decline, and that's what we have right now. The dollar UUP is at the lows of the day here, and I'll throw that chart up for you guys to see. Lows of the day on the UUP, kind of coming right into yesterday's support level right down here, but nonetheless the dollar is lower on the day. That's exactly what we've been calling for in the research center to the research center subscribers, and they've been dead on that, taking that position for a weaker dollar over the next few days. All right, now in addition, let's go back to the SPY. We'll touch on that one. We'll go over some other charts. First of all, you have to look at the pullback here. Again, no confirmation underneath above that 112.50 level. If you pull back, you're going to look for support now, though, because it was confirmed at the 112.38 level, 112.35 level right here. That will be support right here, folks, if you come back into it. If you get through that, you're going to look for this little gap window. Now, gap window is right here with this dotted line. Why is that dotted line important? Well, if you scan back a couple days, you're going to see exactly why. All right? Right here, folks, you have to go back, and we go right to this pivot high on the 3rd of December, gives you that high pivot, and again, you can see it coming up. We came up underneath it quite a few times, right here, over here, just underneath that dotted line as well. Ultimately, that's what we gapped above today. Gap and go to the upside, taking us all the way through this resistance point to this 112.50 level where you didn't confirm, and now you're starting to reverse. So again, I wouldn't be surprised to see this market come back into this 112.35-ish area, where you probably see some technical support based on confirmation in the money stocks confirmation signal. If you come through that, you're going to obviously look for gap window, which is a 20 moving average. Then you're going to look for gap fill down here, and these pivot highs, of course, will be support right around 112 to 112.10. All right, now again, interesting to see where the market closes today. We have resistance all the way up to 113 on the SPY, but let's take a look at some other things on the charts. We also got jobless claims out today, and the jobless claims were pretty good. Now, do I trust them? Nah, not really, because if you take a look at jobless claims, folks, I mean, how many people do you think are getting laid off here into the holidays? It's not going to be as much as a normal year or normal number would expect. So the fact that jobless claims came in around 450,000 is probably about what you'd expect, which is a nice little decline. I'm curious to see once we get into mid-January where the jobless claims are. I think that's going to be more telling than anything, and we'll kind of watch. But nonetheless, it was a decent number on jobless claims this morning reported. Now, if we go to Apple, let's take a look at Apple, folks. Apple's having a beautiful day. You're right into some good resistance up here on Apple. Again, I think anywhere between 205 and 208 is going to be some significant resistance. If you take a look at the daily chart here, folks, let me take a look here. Let's draw some trend lines in here. All right, take that from the exact pivot high. See, take this high, and this is, again, just pure and simple technical analysis, a trend line analysis. If you take that pivot high and connect it to this pivot high, you're right into that resistance right here at around 205 to 208. Anywhere up in this realm on Apple, it's a very high percentage short ratio that you should be looking at. In addition, if you get above that, you're going to go to double top, which is at 208.71 as well. So you're right in the midst of that, into that resistance, double top, triple top, whatever you want to call it, on Apple Computer. And again, there should be some good resistance. Now, the one thing you have to keep in mind, folks, is because the volume will be lighter next week, there's always the possibility that this could get a little bit of a boost. Maybe Apple gets up to about 210, 215-ish area, but ultimately you got to be looking for it to have a good pullback here. Just taking a look at the weekly chart, look at that monstrous weekly chart. Really hasn't touched the 20 on the weekly in quite some time. Came close here, but really hasn't. And now back to that kind of triple top-ish area, just about to the triple top. We're hovering at 207 right now, and really that triple top is at the 208.71 level. And again, that line that I drew in before was at 208, 207. So in any case, folks, that's what you're seeing on Apple. Good resistance on Apple coming into play. Taking a look at Amazon, let's take a quick gander at Amazon. On your daily chart, you've had a good move up. Now, yesterday I happened to note that I believed you were going to start to get some bearish signals in here and start to see a little bit of a pullback on Amazon because of some key factors. Number one was this hit, right? We talk about this trend line right here. All right, take this low to this low right through these lows where you broke down. Now you're retesting that. Sure enough, today, guess what? Amazon is negative when the rest of the market is positive. So you can see how that's working out, folks. That works out beautifully, and this analysis is pure and simple, just in kind of a little judging point for you guys to look at what we do in the research center and what we do in the chat room for those of you that are interested in joining up. But sure and simple enough, you can just see just a trend line there showed you that we broke down. Now you're retesting that back line. That's that shorting opportunity. And again, you want to watch that today to see how that plays out. If it gets through there on Amazon, then you look for a move up in this realm, okay? Somewhere to a double top, that would be your next shorting opportunity on Amazon. All right, so again, let's go back to the SPY. We just want to touch on that. Again, that's the SPY daily with all our trend lines. That's more for the premium guys. And I just want to point out here, right over here when we started this video, this is where the market was. I said watch for it to come back into support because you never confirmed. Look at the move down it's had already. So again, just reading these technicals, going by the in the money stocks methodology, like the confirmation signal, that's going to tell you pretty much where the market goes in and out every which way, and give you a great basis for making money in this market. Again, guys, 2 hidden gems coming in January. Get on board. The DDSS, which was the November hidden gems, just continuing to rip higher. Take a look at this chart, guys. From where we really highlight it right over here, look at the move up. And again, just basically moving into the target, almost up 35-40% just in about a month there time. And again, it's moving towards that 50% return that we constantly talk about. The new one coming out, the 2 new ones coming out in January, should have potential to do at least 50%, at least 50%. So it's going to be a big one, folks. Be ready, join up. We hope to see you next week and in the new year, and be ready to make some profits next year, folks. Take care.